Hello, everybody. Hey, it's Fred Atwater here. Hey, no music today. It's just a real quick update on Raytheon for those interested and following this trade. It's been very, very successful so far. I do want to throw a quick book recommendation out there. Here it is. It's called The Bible of Options Strategies. Um, it's actually a little bit dry on the reading side, but it explains these chart graphs that I have kind of listed over here. It explains them very, very well, um, so that you can understand kind of what the flow and options risk analysis graphs look like. Let's take a look briefly at Raytheon. I'm going to pull this out of the way for just a moment. Here, I'll pull it back and we'll look straight away at it. All right, so Raytheon. The reason I wanted to make this quick brief today or tonight, it's actually Friday night about 7 o'clock or so. So check this out right here. Raytheon broke through and it closed at an all-time high of $186.07. Remember, as we've gone over before, the entry on Raytheon is down here at the blue line where it says entry point. We came into this stock right here, and that was with the 130 strike calls, and it's done nothing but go to the bullish side since we entered. Now up here, notice, remember I have a mark set for an alert above $190. My actual target is $190.68. But if the stock shows continued bullishness, we may continue to let it run and make a little bit more money there. But we will see. Right now, I'm going to have a stop on this stock somewhere down here around 180. So if the stock drops back and drops below 180, which is just about commensurate with this blue line, this $50 line, or 50 simple moving average line at $178.75. If it breaks below that, I'm going to stop out of this trade, take the profits off the table, and then look at re-entering. What we've done though now is called a pretty cool term. It's called pyramiding. It's actually an old term as well. And I'll bring the risk graph over here on this. Let's see. Let's make that big and point out a couple of deals on it right here. So down here, move my picture out of the way. You can see the options positions on it down here. What we did for the pyramid structure, sorry, I'm trying to get the pen up. Here we go. What we did for the pyramid on it was we sold some naked puts last month, sold naked puts this month as well, bought them back. We bought them both back for a couple dollars in profit. When I say a couple dollars, that means $100 a piece, because when you're in options land, everything's times 100. But this month, when I bought back the naked puts that I had sold, I went in and resold what's called an at-the-money bull put spread, and that's what these two clicks are right here. So if you look over here, there's a 180 and a 185 strike put. The short put is at 185. Notice the short number over here on the 4, and the long put right there. That is a bullish position, and let me show you. Oops, I got to take off the stay on top version of that. Put that over here, and then this is called a bull put spread, and you can look over on Wiki here. And then let me show you quick here. Google. Let's look at pyramid stock trading, or how to. You can look at that. Pyramid your way to profits, whatever it means. All it really means is adding to your trade because it's going. So pyramiding involves adding to profitable positions to take advantage of an instrument that is performing well. That's exactly what we're doing. So this instrument is performing very, very well, and it's continued to rise. This white candle here on today's action is a breakthrough candle, and if you look down here, look at that that indicator right there. That's a decent amount of volume. It's not a strong, like this is a strong volume stick right there that I just pointed at secondarily. That's a nice volume stick. That volume stick is commensurate with some action. It looks like right about there on the underlier. So this is good news. This stock has done very well. Looking at $186.70 today. We've ridden it up from 150 with the 130 strike calls. Over here on the risk analysis graph, let's take a quick perusal of the money graph here. So the stock here traded, this line right here is the trade line of where it's doing its deal. The dotted line runs up and intersects with this purple line. The purple line for options traders is the short theta decay line. It can be the long theta decay line too, but since the numbers, the P&L over here are positive numbers, it's a short theta decay line. And what does that mean? It means as of today, our profits sit right here at the intersection of the dotted line and the purple line. And if you look over here, that's just a tick north of $7,000 in profit. If you remember when I had the last video, I had capped out somewhere in the 7,000 range, but since I pyramided onto this, I've driven the max profit up here to just a tick under. It looks like about $7,900, $7,800, where it peaks out for this month. And this space is what's so cool about options trading. That is my short theta decay that is occurring, and as of this will occur. These are the October. They expire on 20 October 17. So today is 29 September with a weekend in between. We got 21 days until those options expire, and this purple line will continue to march upwards. And as long as the stock doesn't capitulate and move down, see this, the strike price, these prices of the stock, as long as the stock keeps going up in price, we stay in this nice, very healthy profit zone on Raytheon. Okay, so this has been a very good setup from the go. It's been working. We pyramided it because it was working good, and so when it's pyramiding, you push. You're like, go, go, go. Like run, Forrest, run. The secret to the trading is really not that hard. It's cut your losses short. You honor your stops. So if a stock goes the wrong way, boom, you're out. And if it's going the right way, you move your stop up to break even, and then let it work some more as it's continuing. And it's kind of an art, a judgment call, but then you're going to pyramid on. You're going to say, ooh, that one's working. I'm going to add to it. Let's drive that fire. All right. You can do that with the market long. You can do it with it short. It works either way. This investment initially was only in the neighborhood of $10,000 worth of Raytheon, and so far we're sitting today at $7,200 in unrealized profit. Anybody want to do math quick? That's a 72% ROI over the time, about the 6-ish, 5-ish months. I'd have to look up the exact date that we traded this on. And that is working extremely, extremely, extremely well. This is only extremely part-time as well. I just have to note where the stock is trading, and then about once a month, twice a month, add to the trade, subtract from it, see what's going on. It doesn't take up me a lot of time to determine. It's either going the right way or it's not. If it's not going the right way, it's going to stop out. If it's going the right way, add on to it. All right. Thank you very much for watching. Have a great weekend, and good luck to you. Sorry, no music today. See ya.